Hi, my name is Alex and I'm the product manager for Aplos. Today I'm going to tell you about what a depreciable life policy is. In one of my previous videos, we talked about a capitalization policy, which is a document that your organization has that states that any item that you purchase over a certain value is going to be considered a fixed asset. The depreciable life policy is a document that kind of takes over at that point, saying once you've decided what a fixed asset is, how are you going to depreciate it and over what period of time? So that's what we're talking about here today. So let's say your threshold is $2,000. Let's say you buy a computer worth $2,500. So once you've got that figured out, now you can go to your depreciable life policy and figure out how long and how you will depreciate that item. So the IRS and GAAP have certain standards on how long categories of items need to be depreciated over, like computers are a certain number of years, buildings are a certain number of years, vehicles, farm animals, stuff like that. So for the sake of simplicity, I'm going to assume that we're going to use the straight line method, which is the most basic form of depreciation. I'll explain that here in a second. And let's say that computers are 5 years, okay? So this computer is $2,500. It meets my threshold, so it's a fixed asset, and I want to depreciate that over 5 years evenly, which is what the straight line method does. So for the next 5 years, I'm going to post an accounting entry that basically reduces the value of this fixed asset on my balance sheet over the next 5 years. So year one is $500, two, $500, all the way down to the last entry in year 5. So at the end of the 5-year period, the fixed asset is worth 0 on your balance sheet, and you've spread the expense over 5 years. So the straight line method is the easiest to use because it spreads the cost of the item out evenly over a certain number of years or periods. The other methods will either do more in the first couple of years or they'll spread it out in a different kind of percentage, depending on how you want to do it. But really, if you're just getting into depreciation and fixed assets and stuff, I would highly just recommend the straight line method. It's the easiest to use, especially once you figure out how long the items need to be depreciated over from the IRS. I hope you found today's content helpful. If you would like to get more emails from us on other topics, then feel free to click the subscribe button and we'll send you some stuff pretty soon.